Investors see no Fed pivot, brace for hawkish Powell message in Jackson Hole, New York. Investors are bracing for the Federal Reserve to double down on its commitment to crushing inflation, and expect its chair Jerome Powell on the annual primary financial institution amassing in Wyoming this week to supply an aggressive tightening message and sprint hopes for a fee-reduced next 12 months. The Jackson Hole, Wyoming retreat comes after investors' final week regarded the transcripts from the Fed's July meeting as leaning dovish and as a inexperienced mild to put some hazard lower back at the table. The stock marketplace to begin with held up and bond yields have been consistent, before markets reconsidered that interpretation. Since the release of the Fed minutes on August 17, the S&P 500 has fallen more or less 3.8%, the benchmark 10-year Treasury yield has risen about 10 basis points (BPS) and nudged returned above 3%, and the greenback received round 1.7% in opposition to the yen, the foreign money pair maximum touchy to charge expectations. Powell's Friday morning speech may want to cement the market tone till the next Federal Open Market Committee assembly subsequent month. Caution and worry are the topic for the markets, stated Stephen Englander, head of global G10 FX research and North America macro method at Standard Chartered (OTC) SCBFF in New York. If Powell says something hawkish and in case you purchase equities or emerging marketplace currencies, you will lose 3% earlier than you may blink your eye. So no one is shopping for risk proper now inside the run-up to Jackson Hole. The Fed, inside the July Assembly minutes, said it saw little proof that inflation pressures have eased, however recognized the threat it had tightened too much and slashed monetary interest. Fed finances futures have priced in a 51% chance of a 50 basis point BP price hike next month, with the Fed finances fee hitting 3.6% with the aid of the cease of the 12 months. A week earlier than Wednesday's release of the minutes, the price futures marketplace had factored in a 75 bits per second price increase. Eurodollar futures have priced in at the least one price reduce among March and December 2023, with the unfold between the two contracts at kind of 44 bits per second on Monday. The peak Fed finances charge is visible at 3.9% in March, Eurodollar futures confirmed. Harley Bassman, coping with companion at Simplify Asset Management in Laguna Beach, California, thinks the price futures pricing is manner off. I think the Fed is going more than what the marketplace thinks in terms of fee hikes. I do not assume inflation is going to be at 2%, 3% next 12 months. It's baked within the cake, stated Bassman. A drop in fuel costs left U.S. purchaser costs unchanged in July, bolstering a moderating inflation situation, although underlying charge pressures remained increased. Producer expenses also declined remaining month at the lower back of cheaper power. Graphic. U.S. inflation measures 20 annual, C20 inflation, PNG, basically we've visible house fees go 1,020% higher, said Bassman. And you will see OER, owner's equivalent lease, keep on rising for the next 6 to 9 months. So the actual CPI print that goes to newspapers is going to keep growing over the subsequent 12 months. Perhaps complicating Powell's messaging, second sector U.S. core personal consumption expenses rate statistics, and critical inflation gauge for the Fed, is due out an hour and a half before the Fed chief's speech beginning at 10 a.m. Eastern Daylight Saving Time, 1400 GMT. Still, the bond market is pricing in a less dire inflation picture. One gauge, break-even inflation, which measures the distinction between the yield on U.S. Treasury inflation-protected securities (TIPS) and nominal Treasuries, has declined, seeing that mid-June from 1 year out to 30-year maturities, Refinitiv records showed. Less frontloading of rate hikes? Standard Chartered's Englander believes the Fed will do something it takes to tug inflation right down to its 2% goal, however it may not do all of the hikes in the following couple of conferences. They may want to say something like, "We are able to hike for so long as we must, as high as we ought to, but we do not should do it over the subsequent to 3 meetings," Englander stated. Ahead of Jackson Hole, speculators' net long positioning at the safe haven dollar rose for the primary time in 4 weeks, according to calculations by an U.S. Commodity Futures Trading Commission information launched closing Friday. IMM FX graphic. US dollar net longs $20% 20 NETP, C20 longs. PNG. The marketplace is panicking up as we approach Jackson Hole, Englander said. To be sure, there are marketplace members who accept as true with there is scope for the Fed to reduce its tightening tempo because the U.S.